Yo, what's up, guys? Let's go ahead and go over my trade here on indices. So I took one in London session. We'll go over a possible trade that could took in New York, but I wasn't like too interested. So yeah, let's go over here. So a bearish bias, extremely anticipatable. I've talked about how to trade Mondays. Typically Mondays are very easy to trade. They're very one-sided. And this is when it's one-sided typically. For reversal, we want to see the previous week or Friday have a very large range in one direction, or just an expansion candle, right? We never want to trade Monday as a continuation to Fridays or the previous week's range, right? We never typically want to do that unless it looks something like this, maybe, right? Where maybe here's Monday, Tuesday, Wednesday, Thursday, and here's like Friday, for example, right? This would technically be a bullish week, but Friday actually created a new phase of price, maybe hitting this daily gap, means that Monday could actually trade in the same direction of the previous week's candle. But if it happens like this, where like this is Friday's candle, and you're trading Monday here, we don't want to trade Monday continuation again like that. Unless there's a clear draw liquidity here, maybe a 4-hour gap, day opens low, like something like that. But typically you don't want to do that, okay? Because of two things. So when you have expansion, where do you likely to get? A new phase of price, right? So automatically, we don't really want to trade continuation, right? But also, you don't really want to do that on the opening price of a new candle. So this is the opening price of a weekly candle is Monday, right? Because in the beginning of a new candle is when you get the new phase of price. That's what creates the open high or the open low of a candle, right? So the new phase of price, even if you're going to continue from the previous range, if this is a bullish range and you want to continue, that open low is what creates a bullish candle, right? Open, low, high, close. This open low is a new phase of price, which is going to happen early on the week, right? Maybe like a Monday, Tuesday reversal, and you expand, etc. Right? So these are reasons why you don't want to trade Monday continuation. You'd actually rather trade it as a counter, right, back into the weekly range. Now, especially if Friday actually reaches a key level or something, right? That would be Monday continuation technically, right? Pretend this is Friday's candle, right? You're trading Monday continuation technically. That's where Monday is also anticipatable, but here we're kind of talking about a Monday reversal, essentially. So this was the pre-6 range. Let's look what the previous week did, right? It's more of an expansion week, right? And now let's look at what Friday did. So if you look at Friday, it makes it very easy because Friday is actually a PSP. So on InQ here, it's a bullish candle. Open here at YM, it is obviously not a bullish candle. It's a bearish candle. After sweeping out that weekly IRL, right, or daily IRL, is going from this weekly gap to this external range liquidity. When you expand into a key level, you can get a new phase of price. Obviously, this phase of price is obviously a reversal, right? So when you look inside this range, it's clearly a reversal, right? V-shaped signature. But when I look inside of this previous day's range, it is not reversal. So this is where you create two-stage PSPs. Because on one asset, the weakest one, clearly a bearish candle and clearly reversed. But I go over here on this bullish candle, it hasn't reversed yet. So this is where you create a two-stage PSP, right? Where we actually create a candle 2. If this candle did reverse and it closed bullish, then you would be trading a candle 3 because in this previous candle 2 it already reversed. This phase of price tells us it is not likely to reverse, guys. So that's how you create two-stage PSPs. Okay, that's where you typically need to demand them, especially if you're going to trade this asset, right? So here we are going to basically demand that reversal off of this high. So let's go to when I took this trade and what you have to wait for. So we are going to wait for Q2. So this is the second 6-hour candle of the daily range to trade this, because when we look inside of this previous quarterly range, right, the first 6 hours of the day, this is not how a bearish like profile would look, right? So you're going to view quarters same way we view candles. If you want to increment of time, like 6 hour, 90-minute, whatever, you ideally want that quarter to support a bearish or a bullish candle, right? So this is obviously a 6-hour candle, but the way it forms is not how a bearish candle would likely ideally form, right? So here it opens low and then it's continuing, right? So here we actually create an SMT, we're just not reversing from it. So clearly the way this candle forms, open low, and then we're coming back to this high, is not how a candle or bearish candle forms, right? So when you actually come and sweep this high again, you want to wait another 2 hours basically until 12 o'clock, right? So that's one thing that we want to wait for. And now this SMT is low probability. You have SMT like this, where this typically happens when markets are decoupled in the form of advanced premium discount. So this is what I mean by that. So as soon as you create an SMT, the first high that gets created, the first swing point, should reverse price. But when this happens, we just keep re-sweeping like this, but you're technically holding the overall SMT like this, the key level, right? You have to demand a strength switch. And I've already been over this, not in a video probably, but I've taught this a couple times, right? Where this type of SMT is low probable, you have to wait for a strength switch, okay? Or it's typically just waiting for time to align as well. That's typically what's happening, right? So this type of SMT, you need a strength switch, but you also need a strength switch because it's in the form of a advanced premium discount sequence, right? So the best, or one of the best ways that you will see advanced premium discount form is actually between higher time frame PSP. So we can use a previous candle's range, or we can use a previous candle as a range, right? That's what I meant to say, right? So this previous day's range, we can mark out the high and low. That can be an advanced premium discount. Over here, we'll do the same thing. Right, so there's our advanced premium discount. So while this asset here on NQ goes and creates a two-stage PSP, this asset over here will be in discounts of the previous candles range. So you get it, it's the same thing, right? Because when I go to the hourly chart, you're gonna see a range there, right? But when that range high is a PSP high or low, it's great, right? It's very high probability. So you probably did not know that. And this forms, advanced premium discount forms, this is how it forms, guys. This is how you want it to form at reversal, is that leading assets will trade into a key level or create SMT, right? And the weakest asset will actually reverse, but this asset will like bullshit, like consolidates, right? So now you have a high probable range on this asset, but no reversal over here. So now you don't have like assets aligned for reversal, right? This is aligned for reversal, but this asset is not. So it must create a reversal. So this is where we create that advanced premium discount. This asset manipulates, creates SMT. Well, this asset retraces into like a gap because we already reversed. And there you go. There's your advanced premium discount. Right, this is probably horrible drawings, but you'll learn all about this in my next video. So I actually really want to do as a sync this week because I've been bullshitting, guys. Like 3 months is insane. Fucking hell. Like I gotta get that shit done, bro. Like I really do want to get a fucking video out. I know I keep saying it, but like, god damn, I just can't. Like, I don't know what's wrong with me, bro. I can't do a YouTube video. I don't know why, but I really need to force myself to do it because you guys have been waiting too long. So yeah, we'll try to definitely get that done, bro. But yeah, back to not being able to trade within this quarter, right? It's because the way it forms, right? But there's also no strength switch to confirm it. I think there actually is. I think there's one right here. Technically, there's one right here. So you have a bearish reversal candle, as you can see. This asset just like is a consolidation candle. That's technically a strength switch. But you want to be waiting for that next quarter to open, which is in 1 hour, right? That's ideally what you want to wait for. And you know, when I look at this kind of PA, it's not the cleanest reversal that you're seeing, right? There's no real gap in price here, not even on the 3 minute. So it's not even that clean. This asset's just consolidating. So, wouldn't probably